We are joined by our next guest, that is Clark Geranen, who's Chief Market Strategist at Calbay Investments, joins us with his thoughts on the markets. Clark, lovely to have you in the show. Thank you very much for your time. What do you make of the steadiness we are seeing in the markets right now? Do you think the markets, believe that this is... do you think the Trump put has been invoked, so to speak?
Not yet. So we've seen sentiment go from triumph to tragedy. And the real concern there is how that's going to affect the consumer. So with the recent spending data that came out, it wasn't really clear that we've seen that hit the consumer yet. So considering consumer spending makes up 75% of the US GDP, it's a number that we really have to track carefully and will be something that the Fed is watching as they come to their decisions over the next 6 months. And right now, the markets have the Fed with 3 to 4 rate cuts baked in, whereas we feel that there's probably really 1 to 2 that are going to take place. And we're going to have to rely on the U.S. consumer and U.S. companies to continue strong earnings in order to make that possible.
Right. And so how are you approaching your portfolio construct at this point in time amid the uncertainty, Clark?
So considering we're in a land of uncertainty, we don't know the what, the who, the when, or how of tariffs. We're advising not to make any investing decisions based solely off tariffs. So we're sticking with the basics with asset allocation, risk tolerance, and time horizon. That being said, because of the volatility over the next few months, we will be looking to put dry powder to work.
And that would be in the form of?
In the form of, there's a few different opportunities. What we've seen is, so far this year, we've seen the multiples come down on large cap growth companies, 15%. So clearly we had a run up over the past 2 years of 20% plus growth in the Mag 7 and other large cap growth companies, while we've seen the large cap value companies hold their multiples steady. So we think after seeing this pullback and earnings continuing at an all-time high, that this is a good opportunity to put some of that dry powder or unused cash into those large cap growth companies.
Right. You're talking about how you're building the case that the Fed might cut twice this year. I often think about how that situation would play out, given that the Fed has committed itself to a pause right now, and that's what broadly, I guess, economists are expecting. The markets, of course, swinging the other way. And whether or not it would be engineered, for the lack of a better word, by fiscal policy of the Trump administration, which has led to economic conditions weaken. And we know that President Trump does want rates lower.
That is something that we could see. So with these tariffs being implemented, like I said, we don't know the who, what, when, where. And so that's the uncertainty. So if we do see inflation come back up, I think that is going to be either the Trump put or the Fed put, and they're going to have to cut rates. So that is a possibility.
Okay. Clark, stay on with us. We'll be right back with you discussing more about the markets and investment opportunities in this environment. And we are back with Clark Geranen, who is Chief Market Strategist at Calbay Investments. Clark, what do you make of, obviously the chip sector and the buoyancy that we've seen, the AI premium that's been ascribed to these chip names, starting with, of course, NVIDIA being the poster boy, but really the overall strategy, given valuations and the focus on ROI coming in because of the DeepSeek disruption. How are you looking at your positions here?
So since we've seen the pullback this year, 15% on the large cap growth companies. And so that does include companies like NVIDIA. So what we're doing is when we have the opportunity with dry powder, we are adding to those positions. Even with some of the DeepSeek disruption, we do still feel that companies like NVIDIA are going to have a strong outlook. So that hasn't necessarily affected the way that we're looking at companies like NVIDIA.
Okay. You're also saying this is a buying opportunity within the S&P 500, broadly speaking. Are you talking about the ETF, the index?
Sure. either the index and or individual companies within the S&P. So we saw right now we're down roughly 3.5%, and we saw the correction, which was one of the 5 fastest corrections in history. Of those other 4 corrections, the returns 3 months, 6 months, and 12 months out were all positive. So it does set historical precedents for it. Clearly, there's no guarantee that that will happen again, but we did like to hear those numbers.
And so you believe that there is still reason enough for all those aggressive targets on the S&P to actually get realized, whether it's 6,000 plus or 6,500 as well on the S&P 500. What is your target?
So we're still targeting between 6,400 to 6,600. That's where we have our outlay right now, and we had that at the beginning of the year, and we're still sticking with that just based on earnings continuing to grow. Earnings have not been hit thus far. So we've seen the multiples compress, which is healthy and what we've needed, and it's really been a small and short correction. But as we stand now, down over only a few percent.
I also want to get your thoughts, and Clark, on the Berkshire Hathaway investment in the Japanese trading houses and how that stock reached record highs. Sitting on a cash pile of $300 billion, that would be the size of some companies. What's your own sense on what's happening with Berkshire Hathaway, and also the view that they're taking on the Japanese trading houses?
Sure, it's a great opportunity for them. I think, like you had mentioned earlier, it is sort of like a commodity play, and that's something that we've looked at as well, are taking a look at commodities through this year, such as gold and silver, which are both have double-digit returns and have really been uncorrelated to everything else in the market besides international returns. So it seems like a logical play for Warren Buffett, and we too have been looking at commodities as well.
Right, and if you're saying that you're looking at gold, is it spot gold or gold miners? Is it silver or silver miners?
It's been the spot, not necessarily the miners. We just think that there's less volatility with the spot than there is with the miners.
Okay, give us your own sense in terms of, Clark, how are you looking at the worries around stagflation? Because you made an interesting point about how earnings have not been impacted thus far being the operative phrase there. But during the course of the next few quarters, do you think if business decisions start to stall, then that would have a cascading impact on overall earnings because consumer sentiment would be hit?
Yes, I think that's the logical outlook. If we do see these negative numbers and we do see companies start to get hit, tariffs if they do increase inflation, then we will be in a spot where stagflation is possible. So I think it's a possibility. Same with recession. I know that major analysts have been putting out odds between 25% and 40%, but from our perspective, that's sort of a conservative view there. So we're not necessarily taking odds that high. But what you laid out is correct. If we do see that those numbers start to fall, it will be a domino effect, so to speak.
Got it. Clark, thanks very much for joining us and giving us your perspective on the markets. Really appreciate your time and your analysis. Geranen Markets will be coming online in just a few moments. We will be getting you the opening trades on streets.